Argentina's economic landscape seems to be in complete turmoil. Inflation is skyrocketing, public debt is high, and confidence in the national currency, the peso, is at an all-time low. In response, both government and opposition leaders have turned to dollarization as a possible solution, sparking significant debate within Argentina and drawing global attention. So, how does Argentina's pivot toward the dollar tie into global sanctions and the broader shifts in international finance? Well, let's break it down. So, Argentina's inflation has soared above 100% annually, creating massive instability and deep public frustration. Presidential candidate Javier Milei, leading with an ultra-liberal economic stance, advocates for replacing the peso with the US dollar to curb inflation, stabilize prices, and gain economic credibility. While dollarization isn't a new idea in Latin America, it's a radical proposal with major implications. By adopting the dollar, Argentina would basically surrender monetary policy control, which could prevent the government from adjusting interest rates to address domestic economic issues. But for many people in Argentina, the promise of stability outweighs the downsides, especially given the peso's rapid depreciation and a bleak history of inflation that's decimated their savings and purchasing power. Now, the push toward dollarization is happening in the context of shifting global financial alliances. Over recent years, US-led sanctions on countries like Russia and Iran have highlighted risks for nations that rely on dollar-based transactions. Sanctions limit these countries' access to the US-dominated SWIFT financial system, effectively cutting them off from the global financial network. Now, in response, some countries have begun de-dollarizing by turning to alternative currencies like Chinese yuan for trade, allowing them to bypass US sanctions and mitigate dependency on dollar-based financial systems. In Argentina's case, this global shift poses a challenge. Argentina has faced economic sanction pressures in recent years, but still relies heavily on dollar reserves for financial stability. Argentina's growing ties with China through its recent BRICS membership and participation in the Belt and Road Initiative enable it to conduct some trade in yuan, reducing the need for dollars for specific transactions. However, for the general economy and public financial trust, the dollar still remains the preferred anchor due to its global liquidity and historical stability. Now, if Argentina dollarizes, it gains immediate benefits like stabilized inflation and a boost to international investor confidence. Yet, this move actually puts them at a risk of losing control over domestic monetary policy and becoming highly vulnerable to US sanctions. For instance, Ecuador, which dollarized in 2000, lost the ability to influence its economy independently through monetary policy, facing challenges during economic downturns. Should Argentina dollarize, its dependency on dollar supply would tie its fate closely to US monetary policy and political decisions, including the potential for secondary effects from sanctions imposed on other countries. Now, the Argentine dollar debate is more than just an economic question. It reflects Argentina's geopolitical alignment in a shifting world order. Dollarization would stabilize inflation, but deepen dependency on US financial systems and political decision, increasing the risk associated with global sanctions. Conversely, leaning into BRICS partnerships and currency swaps may offer Argentina flexibility, but at the cost of immediate economic stability. As Argentina's economy challenges intensify, the direction it chooses will resonate not just domestically, but also across emerging markets, observing how to navigate between Western financial systems and new alliances. Argentina's choice may signal the beginning of a broader shift in how countries balance the stability of dollarization against the autonomy of de-dollarization.